let's start what retention is about. Now before we get in, just raise of hands, number of enterprise startup related folks in the audience. Enterprise, okay, pretty high. What about consumer? Anybody in the consumer part? Okay. So most of our conversation is around enterprise, but it's definitely applicable to the consumer companies as well. So in an enterprise startup, initially you go, you quote the customer, you chase them, you send emails, then they get into trial. After trial, you convince them that they should be buying your product, they buy your product, they start using, and after all these effort, they go away. That is the problem we're going to talk about how to stop. It's not about acquisition, it's more about post-acquiring a customer. How do we stop? So with that, let me ask Avlesh a quick intro about you and your company, one sentence. Yeah.
Hi, I'm Avlesh, co-founder at WebEngage, a Mumbai-based SaaS startup. We are an online marketing automation tool that allows you to get more ROI and conversion on your existing marketing spends.
So your customers are anybody from the marketing department who want to get value out of their spend?
Correct, that's correct.
Good. Anand?
Hi, I'm Anand from Zenoti, and I head the products and operations team there. What we do is we build software for the wellness space, which is enterprise businesses, which are spas, salons, medi-spas, gyms, clinics. So our market space is worldwide, and anybody who does any kind of services, mainly on humans, is our business, okay? And our customers are typically larger enterprise businesses. For example, in India, if you look at all of Kaya Skin Clinics runs our software, or Enrich Salons, or all the high-end brands. So when we target customers, you know, a decision is made at the CEO level.
Okay. Rajaram.
Hey, hi. Good afternoon. This is Rajaraman, co-founder at ChargeBee. We help subscription businesses to manage the recurring payments and subscribers life cycle, and provide a tool to manage your offers and discounts, everything around managing your entire subscription business.
Good. I think we have three variations of the panelists. He is predominantly focused on small businesses, almost selling online, getting the enterprise customers through the channel. Anand is slightly larger customers. Avlesh is really marketing heavy, convincing them that they should use his product. So you get a flavor of the things. So before we get started, let's start with Rajaram. So what is the number one reason you believe that you lose customers? Or do you lose customers, first of all?
Yes. So ours is a horizontal product. So we would like to grab as much customers from different verticals: SaaS, e-commerce, newsletter subscriptions, a membership management, and everything. So our strategy was to go after an entire market, and grab as many customers as possible, offer them free, offer them up to $10K, processing up to $10K, you don't have to pay us and everything. So, and collect the data to figure out who are the customers, category of customers stick with us. So that had been our strategy, to find out, narrow down 2 to 3 category of customers on whom we can concentrate on how to retain them and build the retention framework.
Okay. So you are saying you want to get as many customers as possible upfront, so that you understand who the customers are coming in.
Yeah.
Right. So what about you, Anand? So what type of customers you lose, or what type of customers you come in, given they get in?
So the first thing is, for our customers, we are in a specific vertical, so we know who our customers are. It's not across the board. So there are people who are in specific types of businesses. In those specific businesses, what we have learned through experience, initially we did experiment and learn about different types of customers, but then what we realized is we want the customers who are serious about their businesses, who also are customers who have traction and are growing. So our initial focus was on single locations, but then we stopped and quickly changed it to say, we only want customers who are focused on enterprises and chains, who have multiple locations, are growing their business, are serious about their business, have enough of their customers, and they can pay our bills.
Okay, so it feels for me, I think, to summarize what they're talking about is segmentation of your customers upfront, who are going to be sticky, who are not going to be sticky, is a discoverable item. When you're starting out, get as many customers as possible, then look at the behavior of the cohorts of who is sticky and who is not sticky. And the person who is sticky is where you would spend time and effort in that. Just to summarize how bad the retention can become in terms of your metrics. In most of the enterprise customers, you have like 4 to 5 large metrics: cost of acquiring a customer, CAC, gross margin, then your attrition rate, and lifetime value. So these 4 kind of pivot how you build the enterprise businesses. Assuming most of your businesses are at a gross margin of 80%. So if you do that, if you lose 3 to 4, like 4 customers per month out of 100 customers, which means in 2 years you would have lost all 100 customers. So that 50% attrition rate. If you look at most of the successful enterprise companies, their attrition rates are less than 12% per annum. Any company that has got more than 12% per annum, they have to continue to iterate and figure out. That means losing 1 customer per 100 customers per month. If you have 100 customers, if you lose 1 customer, you have 12% attrition rate. So any attempts to bring the attrition rate below 12% is fantastic. As you are horizontal in nature, as your low-end customers, your attrition rate somewhat goes to 24% per year. It's still livable at 24%. Anything beyond 24% makes it very hard unless your cost of acquiring a customer is less than 6 months. So it's a kind of a play. A lot of things is written about it. You have to play among that. But here, let's focus on things. What will it take to reduce the attrition rate lower? So Avlesh, now in your world, you are telling to slightly larger customers. Obviously, your customers are marketing departments. And when you are segmenting the customers, how do you know they are the right customer for you?
So we've gone through multiple life cycles in terms of what the product is. And to give some perspective, our average contract values would be anywhere between $6,000 to $10,000 annually, and paid in the usual subscription recurring SaaS model. And the tool promises ROI on what you do, basically convert more users on your website. So you're always looking for that incremental uplift when you use WebEngage. This is the current audience segment. This wasn't, when we, a year ago from now. And that's primarily because we were not too vertical in our approach of building marketing and selling. Mostly horizontal by trying to build products as opposed to, be vertical and solve a pain. Being horizontal was great because that gave us a lot of scale to play with. It's easy to acquire customers in a horizontal play. Well, of course, it's easy to lose them also. So they come and go at the same speed. As Shekhar said, if you're losing 3 to 4% customers every month, you're pretty much not growing in that entire year. You'll have to work twice as hard to double your top line. And it doesn't come naturally to you unless you start looking at data yourself for your business. We had a tough time with this too, and the churn was causing a big issue. So there were multiple approaches we took. One was, of course, go vertical. The second thing that has actually helped a lot is our ability to make more money from the same customer. We call it upsell. And there are multiple things that leads to that. That's again a product problem to solve. Why would somebody pay more you throughout the journey? But as you continue to build your SaaS business, it's my advice, depending upon the category that you're in, you should always find those elements which can help you upsell to your customers. And focus, right? So by going vertical, we really knew that we were selling to marketing. Earlier, we were selling to product management, to marketing, to developers, a bunch of people, which behave differently. So now we know who we are building for.
Okay, thanks, Avlesh. So once you know who your customers are, by the way, there are 2 types of churns. One is the logo churn, and the other is the revenue churn. Logo churn is bad, but usually you lose customers because customer dies, they say, my business priorities have changed, they go away, nothing one can do. But the revenue churn is the one that you should watch like a hawk. And the revenue churn, even if you start with 100 customers, at the end of year, say you're at 80 customers, Is your 80 customers paying more than the where you started with 100 customers, then you don't have a revenue churn. So best of the best SaaS companies in the public market use at least a revenue expansion, what's called as a revenue expansion of 10% or more annualized basis. So you lose customers, but revenue from the existing customer base is always higher. So assuming you get the right set of customers you've identified for your business, then once they come on board, how do you make sure they convert fast and stick with you? So let's start with Rajaram. You know, you guys have seen your customers as SaaS customers as your customers, are good customers to come in. But what you have to do to ensure they convert fast and retain?
Typically, in our ChargeBee, we have a sandbox account which customers can use to integrate with their application. So once they go live into a pay by putting the card on file, so they need to do certain things, or the key touch points that we call them, to ensure that they will start doing business using ChargeBee. So for it, building the payment gateway is essential, and ensuring the transactions would go smoothly by simulating some of the sample transactions using the live gateway. These are the two key points, the touch points that we look whether the customers have done it in the product. In the first week after they go live, if they haven't done it, we proactively go and reach out to them and see, hey, do you need any help with setting up a payment gateway, or are you finding difficulty in identifying a payment gateway or getting a payment gateway account? So we try to figure out these things with them and fix it for them so that we could get them on board doing business using our product as early as possible.
So once they register, first few days are your golden moment. If you can't assist them and do these critical steps as he's talked about, it differs from business to business. If they don't do that, most likely they won't come on board. Once they come on board, still, sometimes they get away. So Anand, you guys have attempted some other method of measuring. So what makes you think that your customers stick? What is the study you guys have done, and where do you see that?
Okay. So since we deal with enterprises, one thing which we have invested in is we do have a focus team that helps onboard customers. And they help in making sure that once a customer is signed up, the experience to go live on the system and start using system, the friction is reduced or the pain is reduced. After that, they also measure in terms of certain levels of adoption. So we instrument the product completely in terms of how many people are using, what kind of roles are using. For example, in a company, you have your CFO, your CEO. Apart from that, you have marketing, people who manage employees, HR, inventory, the receptionist, billing. You have so many different people with different roles who have to use the product, and they have to perform certain things. So we instrument all this, monitor all this, make sure they're doing it. And over the first few months is where this is really important to make sure they're doing it. And we try to make sure that, for example, they're sending SMS to their customers, and slowly all these things add to make your product more sticky into that organization. Then it becomes easier for you to keep them and harder for them to leave you.
So you're basically saying is engagement is one proxy to ensure that if they're not engaged, there's a very likelihood that they will going to walk away.
And also, while all engagement is not equal, there are certain types of key things that they must do with your product that you have to identify. That is the behavior for stickiness. Because at the end, you want them to first stick for the first few months, because what you'd find in most products is once they get used to it, once they stay with it for the few months, then they stay with it for a much longer time. So your window of opportunity of the highest risk of churn is the first, maybe the 3 months that they're using your software, where it is easier for them to leave.
So in your world, where slightly larger customers, it's not a self-serve per se, and you are pushing a lot of self-serve earlier on, you had a lot of attrition. Then you discovered some technique that has helped you significantly in the last 6 months or so. Maybe a quick update on what was the insight for you and how it has helped you in your business to ensure customers retain with you.
Yeah. So two things I'd like to say. One, anybody building a DIY product, anybody who expects customer to come, do a few things, the very first sign up and that experience, it's something that you need to obsess about. If you manage to do it right, a lot of your attrition is taken care of. That's where most people churn. Even today in my business also, that's where most people churn. there is this aha moment of being able to do something with your product. And believe me, customers don't want to see a lot of stuff when they sign up. That one use case that the guy has in mind, if he or she is able to do it in that very first visit to you after sign up, the guy has got his aha moment and will stick with you for what it's worth. In our case, for example, it's like, being able to generate the code, put it on the site, create a campaign, go live. See the campaign live on his website without having to speak to anybody else in his engineering or our team. That's the aha moment. We're trying to optimize that as much as we can so that more and more people get that aha moment. And we categorize customers in two buckets, those who have experienced it, those who haven't. It's very easy to retain the ones who have experienced it. Those who haven't continue to be a pain. They'll always be a pain. Over a period of time, we realized that the product that we are building is essentially use case driven. To make it work, you have to think of use cases. And most of us can't think, right? That's the harsh reality of life. So we put a customer success team in place. It was essentially a sales engineering team to help my sales guys sell better, make more use cases, nice, beautiful presentations, decks, customized demos, WebEx demos, make real good stuff. And what it went on to become is what we call as customer success team. It's an amazing experiment we did. It's growing as an organization within my organization now, and is a practice that is helping us not only retain customers for longer, but also incrementally upsell to them over their life cycle. And the team does nothing. It basically touches every single customer, make sure that their campaigns are created the way they should, give them best practices, keep optimizing their stuff. To the extent that in some cases, we are now charging for that service as well. So that's basically one of the fundamental shifts that we have done.
Yeah. So most of the times, the businesses where this customer success team or customer engagement teams are there, if it is not a chargeable entity, you take a hit on gross margin, or you take a hit on CAC. But at least, Avlesh, you have figured out how to charge for it. But in your case, you can't charge for it, and especially if you have to migrate customers from the old data to the new data. So how do you guys play around on the pricing side so that you can accommodate this onboarding to your new platform, which is heavy and costly, and customers are not willing to pay because they've not tasted the product yet? And how do you address that?
So typically in most of our customers, they're on some other system before they come to us. So, unlike in a few cases, most of them are migrating their data because it's a live business. And when they go live on ours, sometimes they make the transition overnight. So it is an investment which we make initially to make sure that they come onto the system. Just like it is hard to get on our system, again, once they're on it, it is also hard to get out of the system. So we do have to invest initially in what we call a customer success team to onboard them. And we take it as part of the CAC or the gross margins in terms of investing in putting in that team forward. Okay. The other thing which we do is customers acknowledge that they have data from the past and they want to bring it in. They're willing to pay for it. Ideally, we'd like to get more from them for what they're willing to pay, but they do pay for it, and they do, take that cost into account when they subscribe to it. The other kinds of things we do is, especially if you are involved in data migrations and we are committing to do something, we ask them to sign up for longer contracts. So for example, someone's willing to pay monthly, we might say, no, we pay you for the data migration. But if you're willing to sign like a 1 year or a 2 year contract and prepay for it, then I'm willing to do the data migration for free because you are committing to my platform.
That's a good way of playing. If you get a 1 year contract upfront, it pays for itself. For the 1 month is, again, your metrics take a hit if they kind of go away.
Cash flow also takes a hit.
Yeah. Exactly. Good. So, assuming you got the right customer segment and you get the customers through the first 3 months, they're starting to use your product. Even with that, it doesn't matter. You still are going to lose the customer as you scale, because as CEOs, when you start scaling, there will be always problems in the platform. Something doesn't work, or your sales guy might have oversold, and they come back after 6 months or 9 months, they're going to walk away. That is the killer for the business. In the 3 months you lose, you can still recover. But if the customers walk away after 6 months, I think CEOs should have a separate metrics on a daily basis to see, are they losing any customer beyond 6 months, I have to be on top of it. But there are techniques even to avoid people walking away from you after 6 months of usage. So you guys do a little bit of that work in terms of API stuff. It will be good to talk about that.
Yeah. So ChargeBee has a very strong API strategy. Some of the platform, as people scale, some of the things they won't get out of the box from the platform. But one thing that we consciously made was to support everything that would help them operationally do a lot of things via API, and ask the customers to have some sort of developer time spent on implementing some of the integrations directly using our API to realize the value that they are looking at out of the box from the product.
So you're saying if there is investment from the customer side,
That's
rather
right.
than just using, that's one way you see that they get more retention is there, even if some things are not working.
That's right. But still, we should end up solving the customer's problem, but have it solved in a different way by getting some of the time invested from their end.
Yeah. In your case, Anand, the customer, it took a heavy duty to onboard because of data. But once they are on your system, how hard for them to get away?
Okay. Just like it's very hard to get in, it's very hard to get out.
Yeah.
So even sometimes, we have the problem of we want some people to leave, but they don't leave, which is there. The other thing I would add to this is also that, as you go in the months of a customer using the product, you also figure out what kind of features you want to build into the product that the product, permeates through the customer's ecosystem. For example, what we did is, we have an app which we rolled out for employees. And if you take, say, a business like Enrich Salons, which has about 1,000 employees across 50 locations, about 600 to 800 of their employees use that day-to-day basis to check their statistics. They never come to the front desk. They're all on apps. So then for them to even think of moving to another platform, there is so much of organizational disruption to think about that they would not move it in, that they'll be willing to work with you. So you have to figure out how to, take your product and build the right kind of features that it goes into the ecosystem of that company in which you're in.
So you both are talking about a product category that is inherently sticky. Right? Once they're inherently sticky, you get in, customers stick with you, unless and until you guys make a really lousy product that they don't like it after 6 months, a lot of complaints, and they'll go extraordinary effort to get out.
Yes.
In your case, where you built the best product, but your value proposition is on the marketing, which means like a treadmill, you always have to be running and showing value. How do you maintain the stickiness after 6 or 9 months where they've seen the initial success, then later they say, hey, you used to give me 3% uplift. Where is that uplift, Avlesh?
Yeah, it's difficult. Look at my receding hairline. It's very, very difficult. Unlike both of these gentlemen, in WebEngage, it's very easy to get in and it's very easy to get out. Just the reverse of category of how it works in more IT, CRM categories. But that said and done, I think there was churn, there is still churn, but the ability to make more money from the ones who stay has kept that in control. We've managed to grow from the same cohort of customers, once acquired, that set of customers continues to grow with us, and some will of course churn out over a period of time. And in our case, it's absolutely unavoidable. It will happen for multiple reasons. The promise, the premise of selling value-based, it works in marketing. Because that's the easiest thing to do. Marketers they fall very easy prey to anything which is ROI. You tell them, you give me one and I'll make it two, they'll give it to you. So that's always an easy sell in marketing. Anybody who's selling a tool in marketing is having a tough time. Because inherently marketers are not very, they don't spend a lot of time on tool. They'll always need a dev support. They'll always need people from other spectrum to make it all work. So they're essential, the key decision-making criteria is always ROI. Now, there are two things. One is, of course, selling based on ROI and pricing based on something else. you need to draw that thin line. A value-based pricing makes it very, very difficult because you're consistently on that treadmill trying to justify value so that you can make money from that customer. And you may or may not create value for multiple reasons. You know, the VC funding might dry down, or the guy might just be shutting down for several reasons. So you're better off by not doing a value price pricing, depending upon the category that you're in. Our pricing is different, and the selling is value-based. We do pretty much all the same set of things, more data integrations, more CRM, more APIs. Those who are able to experience those are the ones who stick for the longest. So it's a very known way of doing it.
So you're saying, don't try to be smart about saying that I will always increase 2 to 3% of your business, because it's inherently flawed in the sense that after 6 months or 12 months, you can't extract value out of it. So therefore, you have to maybe initially sell on a qualitative basis, not so much on the quantitative basis.
Correct.
And set the expectation right, and let the organization use it. So that they continue to be with the platform.
That segment is also familiar with that, Shekhar. They've done it.
You briefly touched upon, and you also have talked about it. One strategy that is working for a lot of companies for retention is like upsell as a retention mechanism. Instead of selling something and keeping away, continuously hit them with upselling of other products, some analytics, package, and extra things. So, you've done some math around it. Maybe, a quick update on what do you think, how it has worked for you guys? Like, you've been upselling many, many things in terms of as a retention mechanism.
Yeah. So what we do is, we have our base product, and then we have about 4 to 5 add-ons on top of that. And what we have found, even in the US markets, is we are all actually able to double the annual contract value because of the add-ons. And the add-ons also make sure that the product is more sticky. And certain key things like analytics, apps for customers, apps for employees and others, which are nice to do, which you initially may not think of, are add-ons, and they do cost more. Okay? And typically, if you find worldwide, what you find in SaaS companies, about 14 to 15% of the money of the annual contract value which companies generate usually come from upsells and from existing customers. So it is a very good way to offset the money you lose because of churn.
So at the high level, just to summarize, figure out which cohort of your customers are the right customers. Initially experiment as much. Figure out who are sticky with your value proposition. So that is the first one to go after. Once you have that customer segment identified, when you aggressively target them, when you come on board, get on calls or instrument things and make sure they use your product. That is the one large indicator of whether they're going to stick with you or not. After 3 or 6 months, watch like a hawk and make sure your existing customers who are already using not leave you because something else has come which is better than you, cheaper than you, freemium, and so on. You have to make it very hard for customers to leave and walk away. So in order to do that, either data stickiness or onboarding stickiness or consumer app stickiness, more it penetrates like a tree. More roots go into the organization. It is harder for an organization to exit out of your product. So that kind of summarizes the retention mechanism. As we started earlier on, if you're losing 12% of your customers on an annualized basis, you have to be alarmed. Not in the early days, it will be 24, sometimes 36%. But after a year of operations, when you start seeing it, make sure it is less than 12% is a great number to hit. And if you have less than 12%, you're doing a really good job with your customers. This is outside of customers that you lose because of they are shutting down. The customers you lose to competition is the one you have to measure. Okay, with that, I would say we'll open up for questions.